All right, the record is playing.
Drop the pin.
Like last week, we are recording.
We're recording.
We're recording.
Recording in progress.
Yeah, so look, Jason, check this out. What? I'm trying to make this where you always see check this out at the bottom. I was going to take that top part off. So once I do the intro, we'll see it. So I'm going to create like a standard one so that that's always at the bottom of the casts, you know. And
so creative.
I know, right? I have that silly picture that I love of us. So we have an interesting topic today.
We do.
And let's roll that intro.
Let's
roll. We'll be back.
Roll it.
Well, hello there. This is your Realtor and Lending team, Jason and Katie. We work in Metro Phoenix, Prescott. Actually, we can work all over Arizona. We do cool things like hold our fingers up and count stuff. We also do things like point and hold our hands in positions where it looks like we're talking about something really important. But the thing we do best is laugh. Oh, and we support you too. So thanks for joining us. We love your socks. Oh, hey.
Hey, we're back.
I don't have you know what else we do best is wear black.
That's right.
Are you wearing black or is it gray?
It's more gray. I didn't get the pre-show memo. Okay.
Well, the Katie memo is like basically I wear black all the time.
I don't know how to say this, but I kind of wear black. So
I've got sheets on my couches and stuff because I've got my sister's dogs here who are adorable, like the 2 Briards now. So the hands are full. And are you drinking coffee, Jason?
I'm not.
Well, did I tell you about this concoction last week? Because
no,
I put okay, so New Mexico Pinon coffee. I did talk about that, and then I add this in there, and this is pumpkin spice.
Oh boy,
sugar free. Now you can get these at Ross, guys. I got this for $3.99. If you're gonna buy this like in the regular store or supermarket or whatever, it's probably like $10. And then if you buy like 1 cup at Starbucks, it's like $10, right? So I use this and then French vanilla also. I know it sounds weird, but it's a super awesome combo, and it's just a tasty treat.
'Tis the season.
Mm-hmm. I never used to like pumpkin spice, but now I do. So I'm a weirdo.
Very cool. Wow.
I've conformed. What are we talking about, Jason, today?
Oh boy, we are talking about some of the most significant financial news that I can think of for many, many years, actually.
I forgot that it was up there. So this is relevant because last week we talked about my buyer who we just had our inspection review yesterday. Thank you very much. This needs to come with like
confetti
and background noise and like clapping and whatever.
Right.
But we just need to get so big that we hire an assistant that does all that for us anyway.
We need a producer. We need somebody to run the soundboard.
We do. One time I said that in a candor with Katie and I was like, I need what did I say? I need an assistant or something. And somebody reached out. They have a media company and I was like, that was a joke. I'm like, my degree was television broadcasting and journalism, so I can figure it out. It's just that I'm joking because it is hard to. Yeah. It's probably good for my brain to have to do all these things, but geez,
right?
Oh geez,
Oh geez.
So anywho, something happened. Now I'm going to ask you about this a little bit later because so everybody's all interest rates, and it's funny because I talked to Tom yesterday, Tom Link, because I butt dialed him. My butt seems to like him a lot.
Nice.
And then I was on the phone with you. So then he called me back later and I was like, that was a butt dial. And he's like, well, I haven't talked to you in a while anyway. So we had a nice little conversation and we talked about this. So why are they rising? Like, what is it at right now? It's over 7%, correct?
Yeah. Well, so here's what's interesting. The Freddie Mac survey came out just a couple hours ago. And the Freddie Mac survey says interest rates are 6.5%. as of Friday, the week ending, whatever that was, the 23rd.
Okay.
The problem with that is that doesn't take into account Monday. And Monday, those mortgage-backed securities ran off by another 150 basis points to price. So if they were to release that survey again today, based on what happened Monday, those rates would be even higher than what's being published all over the internet today. So we're moving to an environment where a 7% interest rate is not Like that's where this thing is going. And I mean, think about that. 7%. I have not had those interest rates since 2001, really.
Well, it's funny because, we had talked about this, I think, during the pandemic and stuff, and people were like, well, interest rates are probably never going to rise above anywhere in the sixes of ever again. And here we are, right?
Yeah.
So here's that age-old question, and we'll talk about some more stuff because people, you can still buy a house. Okay, we're going to talk about this.
Yes.
You can still buy a house. This should not freak you out. You're going to be just fine. But it's that text I got from my friend. What was that? Do you remember that? And I said, how would you respond to this exactly? And it was something about sharpest turn. Redfin of all people, who fired how many employees of theirs?
Right.
Redfin predicts sharpest turn in housing market since 2008 crash. Jason, you had an awesome. I'm gonna write that. I'm gonna type this in as you answer that, just so people can see it, because it's interesting.
So here's the thing: a market turn is different than a market crash. I want you to understand this.
Yeah.
The thing about most headlines that you read on the internet these days, they're designed to get you to click them.
Right.
If they don't create an emotional response with people, it's not going to get clicked on. And one of the greatest emotional responses that you can find is fear, right? Like the more fear that I have, the more, I mean, what does that mean? And it doesn't mean that the market is crashing. It just means that the market is turning. And if you think about it logically, like if you start thinking it through and how hot this market was last year.
Yeah.
No
6 months ago.
no matter what happens, it's going to be a pretty sharp turn when you go the other direction from that way. So it's just an interesting way to write that headline, because it doesn't mean that the market is in free fall and it's crashing and things are crazy it just means that the market is adjusting, and it is adjusting sharply, which is accurate.
Mm-hmm.
But it means that we're transitioning from what has been the most incredible seller's market that's really probably ever existed to a balanced market, to a more healthy market, to what it is that we've been wanting the market to be for some period of time now. So
yeah, are you trying to get rid of that little glowing light that's on you there?
I am. Yes.
The orb. You've got a ghost in your house, Jason.
The orb.
The orb.
The magic orb of destiny.
So again, guys, this is why you need a realtor lender team, because I can't do it all. Jason can't do it all. So typically real estate agents are the ones that bring the business to the lender and the title. I mean, you still get your own business for sure, but I can't do it without Jason. And specifically because I was an English teacher, not a math teacher, right? So I feel like I look very shiny today. But I want to read what you responded, because this is what I do, guys. I reach out to Jason and I say, how should I respond to this? Because I just said, nope, not going to happen. And he's like, no. And I was like, no, and we're going to be just fine. And he said, I think so too. And I'm like, but you sent me this. So obviously you have a question and you think it's going to be something. So something, guys. So this is what Jason said. And this is like a perfect response. Okay. So this is what Redfin predicts: sharpest turn in housing market since 2008 crash. Uh-oh, dun, dun, dun. And he said, it doesn't have to be a very sharp correction for it to be the sharpest turn since 2008. This is clickbait, which is what you said. Okay, the market is going to correct probably 10 to 15%. But given the fact of how much it is that we've gone up, it's still really nothing. And I'm going to reiterate, remember, a turn does not mean a crash. So to all the lay people out there. So before I was in real estate, I would have thought that too. I mean, what are these words? And they carefully choose these words, guys, to scare you. If it's not negative, it's not news.
Well, and here's the thing. I think the problem with the market is they neglect to talk about the positive pieces that's going on. And let me give you the positive piece.
Please.
Okay? Because there's a really positive piece that goes with this. Those interest rates going up, they do affect demand, and they have certainly changed the market. But now all of a sudden that house, that you were going to overpay, because remember, a year ago we're waiving appraisals, we're paying over value.
Yeah.
There's no contingencies in contract, right?
Nobody's fixing their houses. I mean, they're buying a hope.
That's right. So last year somebody lists their house for sale at $500,000. they're accepting an offer at $540,000 and it's appraising at maybe 515, right? So you're paying $35,000 over what the appraised value of that property is,
Right.
and you're getting beat out to even do that, right?
Right.
So would you rather do that? Would you rather pay $550,000 for that house and get an interest rate?
Oh no.
Oh.
Whoa.
Or would you rather pay $480,000 for that house and take an interest rate of 6.5%?
Okay, so say that again really quickly, because you did cut out there for a second. So do this either or again, because that was really awesome.
Yeah. So you can either pay $550,000 for a house that's going to appraise at 515, and you can get a 3.5% interest rate on that, or you can buy that house for $480,000. You can get it with an interest rate of 6.5%, and when the rates come down, because they will eventually come down, when they come down, you can refinance that interest rate lower. Which would you rather do? And
what was the interest rate on the $550,000 house?
3.5.
Okay. I was going to type this up. That became too much.
Yeah. I mean, here's the thing, right? Like 3.5% is a great interest rate. And in the long-term analysis, it really means something. But let me ask you this question, Katie. Okay. How long do people on average stay in their house? What's the average time that people stay in their house?
I think the 7-year itch is applicable here to things. I mean, maybe 7 max, right? But I would say 3 to 5 typically.
Yeah.
7 years max. I mean, or 7 to 10.
Let's use your 7. Let's just go with the first number, right? Okay. If you have the ability to refinance that interest rate within the next 2 years, because I really do believe that rates are going to come back down. The Federal Reserve let me explain this. Rates are higher because inflation is high. Right. And the Federal Reserve is committed to getting that under control. They want a target rate of 2%. And when that happens, these interest rates are going to fall. You're going to be able to take that 6.5% interest rate, and you're going to be able to make it 5.25 or 4.75. And I'm going to tell you, measure the cash flows of that person who bought that house at $450,000 and those mortgage payments over a 7-year period of time. And then you take the person who bought it at 380 and you take the sum of their mortgage payments over a 7-year period of time. And then you figure out what it is that they're going to sell it for in 7 years. I'm going to tell you this, the person who bought it at 380 is going to win. And that's the thing that's significant. You can choose to rent right now and you can pay 100% interest. That's what rent is.
Well, that's actually very true, isn't it?
It is. Or you can buy something at what is a very good price right now because those prices have come down, and you can refinance later to take advantage of the savings and rates go back down.
So then I have an idea in my head. Let's see if you can get on in there, because the inner workings of this brain.
Of course.
So what do you think the biggest? It's what do people need to figure out right now with interest rates this high? Because yes, they will fall. We don't know when. What do they need to figure out?
Well, here's the thing. I'll put it to you this way, Katie. If I told you out of the year that we just came from that you were going to get an interest rate of 6.5%, let's say that your interest rate was going to be 6.5%, or your interest rate was going to be 7% or 5.99. Here's the reality. Reality is all of those interest rates are pretty high compared to where it is that we came from, right?
Right.
Like those are not great interest rates. But the same thing that's true for every single one of those interest rates applies. They're temporary. Those interest rates are not going to be something that you're in for the long term, because when rates do come back down, once inflation is under control and rates do come back down, you just have the ability to refinance it and save that money. So the marginal difference, quite frankly, between 6.5% and 7%, if that's where it is that they go up to, is that a reason to pay 100% interest in rent? Is that and here's the other corollary, and let me make this very clear. The reason why people couldn't buy houses last year, the reason why we had clients who got frustrated and stopped the process, is because they couldn't win a bid on a house.
Right.
They were bid out by like 10, 12 other people, all trying to buy that, sometimes as many as 20, 25. So if you want to wait for those interest rates to come back down, What you're saying is, I want to wait to bid with 15, 20 other people who are doing the same thing for the house. So
Right.
why wouldn't you not put yourself in that position? That's my opinion on the matter.
And then we have to remember that, it was the whole pandemic thing. They kept interest rates lower. We talked about this to keep people in their homes and refinance and that kind of thing. I mean, we're just coming off the strangest couple of years that we're ever going to see in our lifetime, I believe.
Right.
I mean, you never know what can happen. But so what I'm thinking is, if somebody really wants to buy now, quit waiting. Make sure you have the money, okay? So make sure that you can make that payment for at least a year, I would say. Because, I think most people refinance within the first year.
And it depends
After
on
6
interest
months
rates.
at least.
Yeah, well, it depends on those interest rates. It depends on how fast those are going to come down. I
Yeah.
mean, there was a forecast by Fannie Mae. I don't know if this
Sorry.
but they were forecasting interest rates below 5 by next summer. Now, I don't know if that's going to be the case, but
Yeah.
the expectation really everywhere is that rates are going to trend back down once inflation is under control.
So on a $500,000 house, and what's the difference in payment, could you know this off the top of your head, between 3.5% and a 7% interest rate?
Here, you want me to
Oh,
calculate?
you're going to be schwanky right now? And
I can do math. How about that?
So while you're doing that, I'll talk about this, because what I was talking about with Tom, because everybody's all, it's going to crash, these big buzzwords, crash and turn and whatever, okay. He said, so a crash, the percent, like if prices fall below 20% or above, if prices, what is it? Is it fall below 20%? It's considered a crash.
I don't know what the exact metrics are.
So that doesn't mean, so even if it's like considered a crash because of this percentage, whatever this works out to be, it's not going to be like that 2008, there's 1 million homes on the market and everybody's buying a house for $2.
Yeah.
That's not going to happen, especially in a market like Metro Phoenix and where you are, you know what I mean? So.
Hey, Kate, give me that parameter again. What did you want to know the difference in?
Well, I said on a $500,000 house, what's the difference in a mortgage payment between 3.5% and 7%? Let's just go with that. Because not everybody has a 3.5%, right? No, not everybody refinance. A lot of people are at like 4.
So
5.
I'm going to blow your mind. That difference between those two numbers is $900 a month.
That's insane.
It's $900. But again, think about it, right?
That's a lot. I mean, if you only make $3,000 a month, that's a lot.
Right. Well, here, let's just do a little bit of math. I don't know how this is going to come out, but let's do it this way. Let's say that you could buy that house and you could get a $500,000 mortgage. If you bought that same house today, it's not going to be a $500,000 mortgage. It's probably going to be a $475,000, right?
Yeah, because of down payment and whatnot.
Okay, so that difference is $750 a month. Okay, and here's the thing: if you refinance that within, let's say that you refinance it after 2 years. Let's just do that. Okay. So if I refinance that thing after 2 years, and I'm not even going to count the fact that I've been paying that down. I'm just not even going to do it. Let's say I could refinance.
Just making the minimum payment.
Yeah, let's say that I could refinance that to, 5% or whatever. Okay. That thing changes to basically $300 a month. So here's the deal. Let's do it this way: 757 times 24 months. Okay, and then let's say, because we were talking about the 7-year itch, $304 a month, right?
Yeah.
Times 60 months. Okay. The difference in those numbers is $36,000. And I'm saying that if you figure out the difference between what it is that you pay for that house, you're really right in that same position. Do you see what I'm saying?
Yeah. So $36,000 difference, but like if you wait to buy that house, that's going to be a hell of a lot more than $36,000.
That's exactly right.
So, I mean, this is like blowing my mind because I'm not a numbers person. I'm like counting on my fingers.
Yeah. And look, anybody who's watching, if you want to know the math, just comment and ask me to do the math for whatever your scenario is, and I'll give it to you.
Yeah. And we'll answer questions. Last week when I aired it, I'm not going to advertise this because it messed up. So I'm just going to go live. I'm just going to use this to go live after my Candor with Katie tonight. You got double trouble tonight, you guys. And I think that'll be just fine, because usually when this ad thing goes up, it says live video will start at whatever. And then when my live video starts, I've got 2 video things. So people have all commented on this one, and then I lose all that because I don't need the 2 videos and I delete that one. So we're going to do that.
Right.
Jason, this is awesome. Any other last minute anything? I mean, I'm going to do weird in the news.
I think, yeah, no, I think we covered it. I think we got it.
Okay, so it's time for weird in the news. I got to do a little graphic or something for that. Now this is interesting. So Jason, now we come from we come from the olden times.
Olden times.
When we were in college, so same thing with this person. When we were in college, you know, we probably had some. We took lots of pictures, right?
One or two, you know.
So right now, here's my weird in the news. If you're ready for this, okay? This person. Okay, now I gotta put my glasses back on. Oh, I'm there. Foggy. Ah. Okay. All right. So check it out. Can you see this?
Yes.
All right. So college memorabilia of Elon Musk auctioned for $165,000. So imagine. So it's college photos of Tesla CEO Elon Musk and memorabilia, blah blah blah, from his girlfriend at the time for $165,000 at auction.
What?
All right. Yeah, it was a collection of never before seen photos and memorabilia from his girlfriend from college.
Good grief.
And now I guess Musk is doing okay with this, but Musk, he changed his Twitter profile to one of the photos on Wednesday, and he's in a public fight with Twitter to get out of that thing. You know, so Musk and Gwen dated from 94 to 95 when they're both at the University of Pennsylvania.
Yeah.
And split when he graduated and moved to California and said he couldn't talk on the phone because it seemed like a waste of time. Well, that makes sense to me. That's something Elon Musk would say, right? So I think what the big issue is here is we broke up just before he started conquering the world. So she's pissed.
Yeah.
She didn't get to get the golden ticket or whatever, right? So she sold a necklace for $51,000, a photo posing with 4 other resident advisors for $42,000. Wow. And a birthday card where he calls her Boo Boo sold for never $17,000.
What?
I mean, give me a break. Okay?
What?
Give me a break. Give me a break. So I'm like laughing because I'm like, great. Because, you know, my luck, it'll be like some picture of me with my muffin top over my kilt that someone sells and makes money off of. And that's what you got to look at for the rest of your life, you know?
Wow.
Is that crazy?
That's way crazy.
And it's just an asshole thing to do, I think.
Totally.
I mean,
totally.
I mean, we live in the age now that whatever, because, you know, people can just see this all the time. There was something else I found that I'm going to show you really quickly here. So now every picture now is like, oh, shoot, I don't want anybody to see that. But, you know, that's potentially everybody could see it. Now, look at this. Surgeon that ends neuropathy. Surgeon says this ends neuropathy. Do this immediately. Can you see this picture of this person right here?
Yeah.
Pretty sure nobody can do that unless you're, you know, what is it called? Gymnast or something.
Good Lord. Good Lord.
So anywho, Jason, I'm going to rummage through your stuff and find some pictures and I'm going to make some money.
Make some money. You know what? Yeah, let's not and say we did.
Okay. I still have this stupid cold. And kind of. It's just the cough. It's driving me crazy. Yeah. But as always, I don't want to leave without telling you something. I know. I don't want to do it. So I'm going to tell you. I love your socks.
Love your socks, Ryan. Love your socks.
We love your socks too, everybody.
You know what? I really love your socks on a Wednesday. So how about that?
Socks on a Wednesday.
Socks
love it.
Wednesday.
All right, everybody.
All right.
Have a great day.
Peace.